Illustration 7. From the following receipts and payments account of Trichy Recreation Club, prepare income and expenditure account for the year ended 31st March 2018. Okay, so here again you have your receipts and payments. You have to take this into your income and expenditure account. So your format will be in the books of Trichy Recreation Club income and expenditure account for the year ended 31st March 2018. Okay, so after this you should take up the accounts whatever is related to the income and expenditure from this receipts and payments. Okay, so always we should not write the opening balances. That's the first and foremost thing. Second is you need to check up all the receipts side, and whether if you find any capital receipt, only those should not be taken to the income and expenditure account. Okay, so now dividend received is revenue receipt only, so you have to take this to your income and expenditure towards the income side, which is your credit side. Okay, and to sale of old newspaper, again sale of old. Okay, so whenever you see this old word, immediately this is to be considered as revenue, so you can take this to your income and expenditure account, income side. Okay, that's credit side. To members subscription which will be renewed every now and then. It can be half yearly, quarterly, yearly or monthly also, so it will be renewed every now and then, which means it is recurring in nature. So you will take this also, this is also a revenue receipt, so you will take this to your income and expenditure account towards the credit side. So all the account whatever appears here in the receipts, okay, will go to income and expenditure credit side. To locker rent, so locker rent, again this is also renewable, which is recurring in nature, so you will be writing this in the income and expenditure account. Interest on investments, in the previous example we saw sale of investment. Sale of investments, you are totally selling it, which means that will not occur again. Okay, but here you are receiving interest, which means you will be receiving interest every maybe half yearly or yearly, so you have to write or take this amount to your income and expenditure account. To sale of furniture, book value is 4,500, but you're getting you're selling it for rupees 5,000. So if there is anything like this, you immediately have to find out whether there is any profit or loss on sale of this particular furniture. Okay, so here you actually sale of furniture is a capital receipt, wherein we will not write or take this into the income and expenditure account. Okay, but since we are selling this at a profit of 6,000, your book value is 4,400, but you are selling it for 5,000, which means you get a profit of rupees 600 by selling this furniture. So when you get profit on sale of any asset, you have to take that into the income side, that is your credit side of income and expenditure account. Then furniture purchase, so whenever any asset is being purchased, it is capital payment, so we will not take this account. Buy rent is there, so it is revenue in nature, so you will write in the debit side as to rent rupees 2,800. By secretary's honorarium, it is again revenue payment, so you will take this amount to your income and expenditure. Postage, general expenses, printing and stationery, and audit fees, all these four accounts are your revenue payments, so you have to take up all these four values to your income and expenditure account. So as I said, we will not take the closing balances. Okay, so after writing all these accounts related to your expenditure and income, total your income side and the expenditure side separately. Okay, after writing these, after totaling you write the maximum amount what you are getting. Okay, so here it says debit side is more, that's why they have written debit side total as 73,850. And since your credit side has lesser amount, we have to write it as by deficit rupees 2,400 is the difference. So we are writing by deficit rupees 2,400. Here your expenditure is more than your income, so you are writing excess of expenditure over income. Okay, so here this is your deficit, means loss on that particular year, right?